is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Andy in Boulder, Colorado. Hey, Andy, what's going on, brother?
Not much, Tom. How you doing?
I'm great, man. Yourself?
Pretty good. Hey, congratulations on the grandbaby.
Yes, thank you. I know. Tommy just sent me a picture. I mean, it's gorgeous out right now. He just was taking him out for his first walk this morning. He's growling and prowling already.
Yeah, I bet.
Now, Tom O'Brien.
Good afternoon, everybody. It's Tom O'Brien, not the Tom O'Brien normally hosting the show. Tommy O'Brien filling in for my dad. He is on vacation this week. He'll be back on Monday. We got live programs all week, though. We'll have a guest host as well coming up tomorrow. Right now, kicking things off, we have the markets in near record territory. Looking at an S&P positive by 20 points right now at 44.14. Big week of earnings, of course, this week. Tech stocks holding up relatively well. You look at where we are in the NASDAQ 100. Over the course of the week, you were up to 15,134. You sell off in the beginning of the day yesterday. Quite the sell-off, but we almost get it all back over the course of Wednesday and Thursday action. It's not over yet, though. We get Amazon after the bell tonight. Amazon, interesting action ahead of their earnings tonight. It continues lower. Amazon down about 1.3%, pulling back $47. Now you back up Amazon, you put it on a daily, you're talking about an all-time high just made on Amazon, zooming in July 13th, $37.73. You're talking about almost $200 below that price level as we come into their numbers. First numbers that they'll be reported under the new CEO, Andy Jassy. He had been the head of Amazon Web Services. It's interesting. When you get into Amazon, right? You jump into the fundamentals. Now, this is just Thinkorswim. This is their representation. Whether it's right or wrong, I don't even know how they're estimating the market capitalization valuation of each segment of their business, but it is interesting. Amazon Web Services, of the market capitalization, you're talking about 48% percentage of market cap. Amazon North America, about a third of the company. Amazon International, about 17%, and they got $54 billion of cash. Nonetheless, a representation of how big that is to the value of that company. So they'll be coming up after the bell tonight, and they have right now about a $105 move priced into that equity. We'll be taking a look at some of those options. We'll take a look at some example trades maybe for Amazon after the bell tonight. I was playing with some of them earlier. I do not have an option trade on in Amazon right now, but there are ways to trade it. Fast Market, Kevin Hincks, they had a great program today. They had a couple ways that they were trading Amazon coming into the earnings tonight. We'll take a look at that a little bit later in the program as well. Bitcoin jumping around. Bitcoin's trading right near 40,000. Quite the week for Bitcoin. Amazon ties into that story as well. Amazon maybe hiring somebody to get into crypto. Maybe they'll be taking payments. Not going to happen probably anytime this year. Nonetheless, Bitcoin lifts from about 32,000 last week. We're at 39,490 right now. And we have commodities higher today on a day that we have the dollar trading lower. You got crude up $1.19 right now, 73.58. You got the gold contract continuing to charge higher for most of the session. We just made a high about an hour ago, 18.37. Gold's up $31 right now. You're trading at 18.35. Silver catching quite a bit as well, almost makes it up to $26. We were trading at $24.51 on Tuesday. 48 hours later, you're pushing almost $26 on silver. Right now, basically silver moving about twice the action in gold. Percentage-wise, you're up 3%, 3.3%, $25.69. And we jump over to notes and bonds. Pretty tame action across the entire week, really. We have a little bit of volatility, but it's Fed week and nothing too crazy. You see the volume maybe on the 10-year coming in yesterday for Fed Day, but we've been chopping around between about 134.02, 134.17. You're talking about a yield right now, approaching like 1.27%. Yes, it is 1.269, 1.27% on that 10-year right now. We'll take a look at the VIX. Volatility index keeps declining, 1760. Maybe we'll end the week with a 16 handle sometime today or tomorrow. The market proceeds. We'll see how Amazon trades along with some other companies after the bell tonight. This week, you're talking about 1 out of 3 companies in the S&P essentially reporting their earnings this week, along with all the big mega companies, the mega tech companies reporting. Arguably the biggest week of earnings out there for the whole season, performing pretty well in terms of how those numbers are coming out and how the market's taking it. We're making all-time highs. I mean, folks, we're within about 30 minutes of the market making all-time highs. And you could say that almost on a recording for the past X amount of months, as we're all aware. All right, I'm going to jump around to one story that is interesting to me, to say the least, in terms of Disney. So the story out there, and it has to do with Black Widow. Now, we have Disney in my newsletter. I have Disney in my portfolio. I am a Disney bull. In the long run, folks, I see them having a tremendous amount of value once they don't have to deal with, unfortunately, COVID and how that is weighing on the parks and the movie theaters. But boy, they are capitalizing on the growth of Disney Plus over that time. Now, this is where it gets interesting because, man, if I was Scarlett Johansson, I would be pissed in a big way. Disney, I mean, many times, a lot of these actors were signing contracts with studios in a world where big budget films got released in movie theaters for X period of days or weeks or months. And a majority of the film's gross revenue that was taken in at those box offices was then determined. The actor's pay was bonused, of course, according to that performance. Well, Disney Plus, I think they pushed out $60 million opening weekend to Disney Plus streaming numbers over that time. Now, the interesting thing is they have supposedly in here a response. The lawsuit includes a response. So according to the filing, Johansson's representatives had sought assurances as far back as 2019, prior to COVID, when Disney Plus was preparing to launch. You have to be aware, though, right? They're launching the streaming platform. You want to make sure that they don't take your movie, put it in a streaming platform. It hurts the box office films. It helps them, but you don't get paid, rightfully so. Preparing to launch, Disney executives suggested that the content would be available exclusively on the service. Okay, but then the lawsuit even includes a response from Marvel's chief counsel, which confirmed that it would be released like other, and that's the Marvel comic book universe is what they're talking about, films. We understand that should the plan change, we would need to discuss this with you and come to an understanding as the deal is based on a series of box office bonuses. That's their lawyer putting it in writing. I'm sure they probably have a case on their own right. Who knows where it will fall, but you're going to see the movie business dramatically transform when you think about how every contract is going to have to be written now. And this is happening in more than one case in this situation. Interesting, though, this is the first one that really pushed out $60 million in actual sales to the streaming service for $30 a pop. Now, I'm not sure. Maybe that contributes to the box office film. I'm not sure how that gets categorized for the purposes of bonuses. Even if the films are just pushing out for free, as HBO Max has, right? They're not getting direct revenue from that, but they're getting direct revenue from people signing up for HBO Max and staying on as a subscriber, which is not represented in there. So you're going to see this play out, and it's just going to transform the industry when you think about how every single contract needs to be written to now address the reality that either the production house is going to take their film and include it for free as part of their service, potentially, and they're using, as the allegation, COVID as an excuse to do this. It's probably a fair allegation, especially from the actor's perspective. I would feel probably the same exact way. But that's going to transform things when every contract has to address the value that they will put out there. Disney today, pulling back a little bit. You were up to 181. You're trading at 178.75. You're down about 0.2%. Markets positive, though, by about 0.5%. Stay tuned. When we come back, folks, we'll be taking a look at Amazon when we come back.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Tommy O'Brien filling in for my dad. He's on vacation this week. We got live shows all week, though, and he will be back on Monday. Jumping over to Amazon, down about 1.2% right now, trading at $35.89. You're almost $200 off the all-time highs on Amazon made earlier this month. You jump over to the Analyze tab, folks. You jump over, whether it's the fundamentals, you can see the one-day expected move, about $105 move, priced into their earnings event coming into the bell tonight. Now, that's just for today. If you're really just saying, you know, what's the implied move by maybe the end of tomorrow? Well, there's the number a little bit larger, $117 move for the July 30th options. You know, a trade I was playing around with, and I have not made this trade. I'm not recommending this trade at all, folks, okay? It's a very, very bullish trade on Amazon, but it is cool when you start to get into the options market, how trades can be set up. And this is why, folks, if you haven't checked out the program Fast Market at 11 o'clock every single trading day, live on Tiger TV, Kevin Hincks and Alex Coffey and the team, they do an outstanding job on the show. They break down hypothetical trades, and they walk you through some of the simple ways that you can kind of set up your own trade. Now, what's so cool about this, right, is that, and I was just in here seeing what kind of volatility is priced into Amazon earnings, what kind of volatility is priced in when you go, whether you're talking about the July expirations, where you talk about an expected move in either direction, okay, is about $120. You move down the calendar line in terms of how far you go out. You go out to August expirations, you're talking about $220. You're talking about almost twice the implied volatility move priced into options going out that far. You want action all the way through December, you're talking about a $542 move. Now, that's a long time to be buying exposure to a stock like Amazon that's trading at $3,600. We got earnings coming right now down the line. If you got the December action, you're going to have another set of earnings in there as well for next quarter, okay? You got holiday season coming in line, and I was just trying to see what kind of moves are implied here. And what's so cool is, you know, you could do either side of these, all right? And as they say on Fast Market, this is for example purposes, folks, completely. But it is pretty cool when you try and understand how you can use options and what you're able to do with it. Now, when I was looking at this earlier, which made it so fascinating, is it was actually break even, okay? It was actually basically ticking at about zero. And what I'm going to show you is on one side of this trade, you're basically purchasing a call spread dramatically higher above the market. Keeping in mind, these options expire December 17th. Okay, so you would be purchasing a $4,000 call. Very simple. That gives you the right to buy Amazon at $4,000. And you would be to offset some of that cost, because maybe you just don't think at some point you don't want upward exposure. You're selling a call at $4,500. Now, you go all the way out to December, And that actually does have value, the 4,500. All right, let's pull it up. There's your December contracts options. You go out all the way to 4,500, and you're talking about the 4,500 call, is trading at about 28, right? $28 for that 4,500. Remarkable when you look at the action. But if you're going to be the one selling somebody that, you better be rewarded for some premium, because there is a very realistic realistic probability that Amazon could trade above that. So you're buying a 4,000 call, you're selling a 4,500. You would make money between 4,000 and 4,500. Okay, now normally that would cost you, right now, for instance, to buy the 4,000 call going out to December, you're talking about almost $100 right now to buy that. Okay, and that's quite a price tag when you're talking about options are 100 shares. So you're talking about $10,000 to buy that contract, to buy a $4,000 call. But what you're able to do is you're able to offset some of it by capping your profits at 4,500, which is $30. So you get about $70 or $7,000 on the call side. Now the coolest part is that then you're selling a put spread. Okay, now this is leverage upon leverage, folks, and this is what it looks like on a risk profile. Okay, you take exposure from 3,500 to 3,300. You sell a put at 3,500, which gives somebody else the right to sell it at 3,500. So you incur the losses below that level. You want to make sure you have defined risk. So you end up purchasing a put yourself to cap that loss at 3,300. Here's where this trade lines up, folks, okay? Between 3,500 and 4,000, you break even on Amazon, and this is as of December expiration. If Amazon trades below 3,500, you start to lose money because you've sold somebody a put at 3,500 where they are able to sell it at 3,500, and you have to buy it back in the market. The lower the market that goes, the more money you lose. Okay, so you do risk, and this is one contract. It's a $20,000 potential risk, folks. And again, I am not recommending it. I'm trying to walk you through kind of how cool some strategies are that you can manufacture yourself depending on your own market bias. Okay, because I think it's a pretty cool trade that you can actually break even between 3,500 and 4,000 on Amazon by December. And if you get a run up to 4,500, okay, you have the exposure between 4,000 and 4,500, and you have a profit potential of about $50,000. That's going to represent $500 of movement on one contract. But it's a pretty cool setup on Amazon when you look at how, and this is what I love watching Fast Market about, in this situation, okay, you're getting a credit, and let's pretend this is trading at zero for all intensive purposes. It is trading at zero when you're talking about a stock at $3,600, et cetera. You're able to sell a put spread and take in credit, and you use that credit to offset what would be usually the cost of a call spread between 4,000 and 4,500, because ordinarily this call spread would cost you $70 in terms of the price per share. So your break even would be $4,070 if you were just purchasing the call spread, okay? And it would cost you $7,000 for one contract, which is 100 shares. As a result, you could lose $20,000 on this trade, though, because you've chosen to give somebody else kind of a put spread. You've sold a put spread, which increases your negative exposure, and you're using the capital that you gain by increasing your negative exposure to ratchet up your positive side. It's a high-risk trade, folks. I'm not recommending it again, because even putting it out, I was debating it, all right? But I was talking to even friends about it earlier today, and some of them who are really, really bright people in various industries, just not in the finance industry, were struggling to understand that trade. And if you are, I get it. It took me a little while to understand it. We're talking about a four-leg trade on almost a stock that's trading at $4,000. You have puts involved. You have calls involved. You have one trade. One side of that trade is collecting premium. See, even the terms are so important as you walk through it. One side's collecting a credit to offset the debit that you would have to pay on the other side of that trade, and you have your trade set up. And visually, which is what I love about the Thinkorswim platform, it makes sense a lot easier when you can kind of see your profit loss. The blue line here is December expiration. That's to keep an eye on. So Amazon will be out with their numbers tonight. You have two earnings events through that. Now, you got to be right that Amazon's not going to go lower, because Amazon goes lower, you might lose $20,000 in no time, folks. And 3,300, okay, is less than 10% of where that stock is trading at right now. So you better believe that's a real possibility that this is a max loss trade by December. We're a very volatile time. The market's sitting near all-time highs across the board, and we got a lot of jobs to make up in the market. but I thought it was a pretty cool trade nonetheless. It goes out to December. They had a couple great trades on Fast Market earlier this morning, but nonetheless, we'll see how Amazon trades tonight. But before that, we're trading a little bit lower, which is surprising coming into their numbers. We'll see how they do. They were talking about on Fast Market, Kevin Hincks was talking about, man, if you ever get a stock split, and again, I have no idea. I have no bias on this, and I don't have an option trade on this at all. I do have some Amazon in retirement, but everybody's got some Amazon in some type of index fund if you do. They'll be out with their numbers. And the reason why I looked at it as well, you're only talking about a $100 move. Not a lot of move in terms of the implied volatility for a $3,600 stock, potentially. All right, folks, stay tuned. S&P is positive by 20. Be right back after the break.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Tommy O'Brien filling in for my dad, Tom. Right now, we got the S&Ps up by 20 points, hanging tough. Quiet market when you think about in terms of just a trickle in upward territory. You take a look at the S&Ps. We started the day at about 4,400 on a 15-minute basis. It's just been a slow melt upward to higher territory. Wait a second. There we go, yeah. Higher territory to about 130, but you look at the trading range, you're talking about maybe 10 points in the S&P, 20 points from the lows we had today. Jumping over to Robinhood. So Robinhood goes public today. I believe it was $38. Let's see. Let's get the headline up here, because they are lower on their open. Yes, they sold 55 million shares Wednesday, $38 a piece. They were marketing them for 38 to 42. Whoever took them at 38, you just lost 6.5% on that investment. Maybe you're going to hold it for more than one day. That could be the argument. Not too dramatic of a pullback when you think about the valuation of this company and how they've changed. Fully diluted value, about $32 billion. Maybe we're talking about still short of the more than 36 they would have had at the top end. So that's 32, pushing it out at $38 a share. You're going to be about 6% below that. So you're talking about a $30 billion company. And interesting how they changed the game in town in terms of free trading, whether it's equities and options. And I think, for the investor, folks, there's arguments on both sides of it to a certain degree in terms of, liquidity and ease of access and so forth. But it is a little worrisome. I mean, you see ads out there, right, from Interactive Brokers. They have, I believe, one way to trade, which is commission-free, which they pay for order flow. They sell the order flow. And the other way to pay is they try and match you up with a price that may be better than that. That seems worrisome in the long term for a market over there in terms of how that will play out over and over. All right, we got a caller on the line. We got Andy in Boulder, Colorado. Andy, good afternoon.
How you doing, Tommy?
I'm doing great, man. How are you doing in Colorado?
I can't complain. Everything's going pretty well.
Fantastic, man. So what are we taking a look at today?
Hey, so I want to look at Titan International, TWI.
Okay.
Perfect.
And what are you doing?
Caterpillar and Deere both are jumping up today, too. It seems like they're all kind of trending up, and it might be because of this infrastructure bill, possibly.
It definitely could be, man. So I got them up here. Titan International. They got, looks like wheel, tire, undercarriage, industrial. The company segments agricultural, earth-moving, construction. Company produces a range of products, whether equipment manufacturers, etc. So I'm taking a look. Let's see. How big of a company we're dealing with here? We're talking about a $517 million market cap. So it's a small company. And let's see. Putting it on the daily. So we make a run up to 1182 back in May, and what was that? They come out with their numbers. Have you been following this? And they kind of trade lower following that. Seems like their last earnings, right? They came out and that kind of started the slide. And what do they have? Numbers out tonight, or are they already out? No, you're up 8%. Are they already out? Yes, they are. Okay.
I think they came out, yeah. And I've been in and out of this before, yes.
Okay, so I got a little bit of a summation of it now. Now, I'm sorry, say it again. Are you looking to get in this now? Is that what?
Yeah, I'm looking to get back in.
Okay. The one thing that is cool here is, you have a downward channel, of course, from where it was in May, 1182. I'm just going to draw this. Are you watching Tiger TV by chance, Andy?
Yes. Yep.
Okay,
yep.
Perfect. So pretty well defined from the upper boundary of 1182. You trade down. Now, what's cool is this thing jumps above it, right? I mean, quite an acceleration from where you are on the earnings. What I like to see in those sometimes is just maybe to come back and test that channel line. So maybe you get down to $8 or so. Maybe you get down to slightly below that, and that might be a nice entry there to get into that. That would be nice because, yeah, it's nice strength. It's nice strength on earnings, but anytime you're up 8%, maybe you just get a pullback on their earnings, enthusiasm just by itself.
Right, yeah. Maybe fill in the gap a little bit from yesterday.
Exactly, exactly. But that's the type of move you like to see, breaking out of a downward channel in a big way. Now you're coming into, what's that, the options expiration or the 25th, the huge volume day on the 25th. Was the market going crazy? And that high there is 902. The bottom of that bar you're coming into is 851. So, yeah, I mean, when I look at a stock like that and you're in a downward channel, you break out once, it's tempting. You could always start with a small position if you wanted to, but it's even sweeter if it can come back and test that line before maybe it breaks to the upside.
Absolutely. Cool. We'll see what happens.
Awesome, man. I appreciate the call.
Thank you, Tommy. Have a good one.
Okay. You too, Andy. Thanks, man. Folks, give us a call, 877-927-6648. We appreciate the call from Andy. And we're all in the probability business, folks. You never know what's going to happen. Like you said, we'll see what happens, right? That's the attitude you got to have. You're making probability wagers on, events in the future that you cannot predict. And you always have to keep your risk in check in a big way because you never can be more right than the market, and you never know what's around the corner sometimes in terms of potential moves in either direction that sometimes you think are just out of whack. I mean, in the year of meme stocks, let alone everything else going on, right? Never, ever would you have thought that stocks in the likes of movie theaters could take off to the tune of $10 to $72, let alone GameStop? Just makes no sense whatsoever. I mean, if you said that this stock was going to settle at 166, that's like the floor of GameStop after March 8th. Remarkable to even think that, but that's where we are, let alone the multiple spikes we've had above $300. That's right, multiple spikes above $300, and you started the year at $20. And I don't think much has changed in that business plan just yet. You know, they have the players maybe lining up to change things in terms of the management over there, but not quite yet in terms of actual numbers changing it. Not quite yet at all. Okay, jumping back too. So taking a look at some of the companies with their earnings tonight. So we got Amazon. They are the headline number. A couple of the other companies to keep your eye on after the bell. Let's jump over. So you have Pinterest out with their numbers. They got an expected move about 10%. There's some volatility for you. You want to sell some premium? That's a nice trade setup that you can sell some premium. I talked about options, folks, implied volatility. I mean, you love to see that if you want to be selling premium. Now, on the flip side of that, if you think you're going to be the one predicting that volatility is going to be coming for Pinterest, well, the market's already pricing in a 10% move just on the earnings. You look at the move that we're talking about through Friday, you're talking about $7.74 expected move going into July 30th expiration, which basically means if you're talking about an at-the-money put or call, it's about $4, which is a big at-the-money put or call when you got to be directionally correct. And then you got to get about a 5% move in the direction that you predict to break even. I mean, that's saying right away, you know, that if you're doing any type of trade just volatility based, you're talking about almost 10%. Now, Pinterest backing this up, the 3-year weekly, to see where we've been. Yeah, you're talking about $72.55. We were at a low of $10. We came into COVID at about $25. Let's go over to Mike in Ormond Beach. Mike, good afternoon.
Hey, Tommy. First thing I want to do is thank you every day for your morning market kickoff. It's great information to give us like an insight of what, you know, what direction everything's going in. But I'm looking at GDX. I kind of day traded it a little bit today, and I'm wondering, do you think we'll fill that gap where we gapped up today before we really get blasted to the upside? What's your opinion?
Well, first of all, man, thanks so much for the kind words, and thanks so much for tuning in. I'm so lucky to get to do what I do every single day in the morning, and I appreciate it. I appreciate you giving me a call, man.
And you're good at it. You're very good at it, too.
Listen, you're too kind. Well, perfect. You know what? We got a break right now, Mike. I'm going to take a look at the GDX. We'll be talking gold. Can you hang on during the break for me?
Sure.
Okay, perfect. Stay tuned, folks. We'll be talking to Mike in Ormond Beach. We'll be talking a little bit of gold when we get back after the break. Stay tuned. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3x bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. We get the markets in positive territory. We got 18 minutes left to go in trading action for the day. Coming up, we got Amazon earnings after the bell, along with some others, and we're on the line with Mike from Ormond Beach, and we're talking a little bit of GDX. And Mike, I'm going to jump over to the gold contract real quick, of course, because that's going to relate to what's happening in the GDX. And what's so important, of course, is the dollar index, right? So we have gold up today, $29. We've caught a nice bid on the gold contract. I mean, you look where we are. I get the contract on a daily basis. If you're watching Tiger TV, right, you trade up from March at a price level about $16.75. You make $19.25. You got a nice base right at the 618 of that number at about $1,775, give or take. Now, what's cool here is you could have a nice A to B, C to D with your A point being maybe June 30th. Maybe you call it the 29th, right? Your B point lining up on July 15th. That's going to be about $17.50. Up to about $18.35. So you're talking about an $85 A to B. And this is the low $17.80. So that's going to bring in about $18.75, which would be the lower boundary of that top end there. Now, the dollar index, though, which I want to bring up, of course, you look at the dollar index. Well, we're back today almost 30 or 40 ticks, I believe. Today alone, we're trading just under 92. And it's really going to all be about the dollar, Mike. I mean, that's, in terms of gold, but I could see that could happen. But you look at it, if it makes it back to 90, the dollar index, that would be where the dollar index was in May. May. And if you look where gold was in May, right? I know, I'm sure you know this, but for people out there that might not have matched these up, I mean, it's just super correlated to maybe that's where you're pushing 1875 or 1900 if you're back to that same level. But it's a nice setup, and you just got above the highs you had on July 15th. The high there was 1835. So you did get above it, and you've pulled back under it now, right? But you have more volume today in terms of about 200,000 contracts. You got about 160 there. So that's usually what I look at, even if I'm getting into the GDX for maybe a little bit more of a percentage play or so forth. Right. But, as my dad's talked about it, even in his gold report, that, when you've had some of gold run, the GDX has not run, right? And so the fear there is that if you get a market sell-off, man, just in general equity market sell-off, like the market's taken off and the GDX has not taken off so much at all. So if the market really accelerates lower, that could really get drawn down a bit on those stocks, and we're sitting at basically all-time highs. So it's a little dicey there.
Yeah, and the way I trade, Tommy, I use really tight stops, and most of my trading lately has been intraday.
Okay, cool.
I just to be on the safe side. I mean, sometimes I miss out on some good, overnight bounces, but I'd rather be safe.
Yeah, I especially with, I've been talking about, and I think that's a great strategy, Mike, for sure. Right now, especially, the VIX is pairing some of those gains, but we've seen it, man. The sell-offs have been furious, and somehow they get erased the next day or two. Fundamentally, I haven't figured out how everybody sells the market down 1.5% or maybe 2%, and then they wake up the next morning and realize that we actually should be at all-time highs by the end of the week. But nonetheless, that's how it's been happening so far, right? But gold in general right now, man, I think, I know you're so short term that's tough for me. I think about things in a little bit of a longer term basis. But, keep your eye on that dollar, as you know, because it's just trading right off that dollar, man. And, if we're just trend trading, the dollar could make it back to that area of $90, the dollar index. And if it does, gold's going to, be trading higher consistently. Well, it does for sure.
Right.
All right, man.
Okay, well, thank you very much, Tom.
I appreciate the call, Mike. Thanks so much, man. You have a great Thursday. We'll talk to you.
Bye.
Bye. Yeah, I mean, it's a tough one, folks. As our caller previous, Andy, said, we'll see what happens. And there you go. But gold catching a nice bid, and that's quite an acceleration in terms of the bar you have there. You would love to see it. Now, the close here we had, was 1830 on July 15th. So you would close above that close. You'd have a higher close. You get above that level. It'd be nice to see that take out that whole bar, right? To get the whole bar. The whole bar is 1835. We're trading at 1833.20 right now. That's the daily in terms of what you're looking at there in gold. And it is nice that it bounced twice off that 618 in early June, June 18th, and then bounced off that level again on about June 30th before it really accelerated higher. And even if you're talking about an ABC on this smaller level, okay, that still brings you up to about 1875, about $40 higher than what we're trading at right now in that gold contract. All right, jumping around to what else we have in terms of stocks coming out with numbers. So I said Amazon, we get Pinterest after the bell as well. You're going to get Albertsons, you get Overstock. Let's check out Overstock. Overstock after the bell tonight. We get some interesting ones before the bell tomorrow morning as well. Overstock, backing this up for the full run we had. I mean, you want to talk about a roller coaster, folks? This thing was going BK during the depths of COVID. You trade up to 128. You trade back down to a price of 48. You come into this year at 46. You make it as high as 109, and we're sitting at $73 right now in Overstock. Jump over to the Analyze tab. They're coming out. Now here's where you want to be used to what's happening, folks, right? So they're saying they're coming out. Okay, they are. Maybe they got no volatility. Maybe they already have guidance out, because that's basically a nothing move. Not sure what's going on. But they only have $1 move basically priced into their earnings. So not sure how that plays out in terms of their numbers. Let's take it out. Are they already out somehow? Yeah, they sure are. Okay. They're out this morning. I had them listed on my list somehow after the bell tonight. But out with their earnings. That would make sense. And that's where you just want to become familiar, folks. That number right away immediately told me they did not have earnings tonight. Immediately. Because there's no way that any real earnings event where there's volatility and unknown variables in play would $1.73 make sense for the volatility that's priced into an equity trading at $73 if they had an actual earnings event going on tonight. Okay, let's jump around to some of the other commodities. Crude catching a bid. Quite the week Crude has. Then we trade up to 73.67. I mean, look at this just ticking across each day. That's as the contract closed. There's your daily. Ticking higher. Now you make it up to $72 on that is last Friday, and we're going to end the week with quite a strong bar here. Amazing that you got down to 65.01 when you back it up 9 days ago, and just like that, we're trading at 73.60 right now in crude. We covered gold. Silver's really accelerating higher as well, and again, so much of this having to do with the dollar index. Silver quite a bit, but it's been pummeled lately. From June 14th, you're trading at $28 all the way down to $25.63. All right, let's take a look at some of the other stocks that are moving, some of the big stocks. Facebook down about 4%. Keep your eye on Facebook. Not breaking any trend lines, not breaking any channel lines at all. Facebook's been a rocket ship from $260. I mean, we're trading up $100 higher than what you were trading at less than 5 months ago in this share price. So that's about a 40% acceleration, still being down 4% today. But they talked about decelerating revenue growth. Now, that's not shrinking revenue, folks. That's decelerating revenue growth. They're not going to be growing as fast as they have been, but that contributes to the multiples of a company like that. And public companies that are growth companies don't usually like to have decelerating growth as that applies to the multiples. So keep your eye on Facebook of how that plays out. Tesla is trading higher today by about 4.4%, putting on a 15-minute. There's the action today. Accelerate out of the gate. They got an upgrade. You're up $25 on Tesla, trading at $675.50 right now. We'll jump around to some of the other FANG stocks, had their earnings this week. Microsoft basically settling right where you were prior to their earnings coming out. We're at about $286 right now for Microsoft. Apple shares a little bit lower from their numbers in terms of trading lower yesterday, but today we're up about 0.5% on Apple shares, and we'll check in on Google. Google basically flat today. Let's finish it up with Amazon. Amazon down about 1.1%. Stay tuned, folks. We'll be right back to finish up the show.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Tommy O'Brien filling in for my dad, Tom. He's on vacation. He'll be back on Monday. We got live shows all day, though. You'll have a guest host coming up tomorrow as well. Right now, you get the S&Ps. We're positive by 19 points coming into the final few minutes of trading. We got Amazon up here. They're reporting their numbers after the bell. Coming into that, down about 1.1%. We're trading at $35.90. You got an expected move of just more than about $100 on their numbers in terms of what they will be looking for in terms of the numbers. Okay, and there's a lot they'll be talking about, of course. The first earnings event with the new CEO in there. How about $12.22 a share earnings? Revenue, $115 billion. You want to create a business that does $1 billion in revenue a day? Well, good luck to you. You're still going to be behind Amazon, which is crushing that number. $115 billion in revenue for the quarter they'll be looking for. A year ago, they did just shy of $89 billion. Remarkable growth for that company, still at the size that it's at. For the full year ending in December, earnings expected to rise 33% over the year to $55.86. Full revenue just shy of $500 billion in one calendar year. And you get into some of the growth numbers for Amazon Web Services they'll be looking for. For Q2, analysts estimate AWS revenue growth of 30%, reaching almost $15 billion. In the first quarter, they were at $13.5 billion. 32% year over year. Market had only been looking for 22.5% growth. Overall Q1 revenue 44% on the year to $108.52 billion. So they'll be looking to come in above that number with $115+ billion for Amazon shares potentially. And as we come into that opening bell, a little bit of a lift. I mean, all things in context, you're talking about a $3,600 stock, but you started the hour off at about $35.80, and we're looking to finish off the hour in terms of the trading day at about $3,600 right now for Amazon. They'll be out with their numbers after the bell. Thanks so much for tuning in, folks. Have a great night. Have a safe night. Come on back. 9 a.m. tomorrow. I'll be doing my show, Morning Market Kickoff. We'll have my program all trading day. Thanks so much for tuning in, folks.
Building wealth trading in the stock market seems